Welcome to Trading Nation. I'm Brian Sullivan. We're joined today by Gina Sanchez of Chantico Global and Boris Schlossberg of BK Asset Management. Gina, we're going to put you on the spot a bit. Back in October, you said a Trump win would be bad for the markets. Look at this.
On balance, the market probably needs Clinton to win more than it is prepared for a Trump win. If we have a Trump win, we could have huge headwinds into consumption, which would be extremely negative for earnings. And you're looking right now at 19 times, 20 times earnings. That number would have to be vastly repriced.
Greatest animation probably we've ever run. Also, maybe the only animation that we have ever run. Gina Sanchez, care to comment on that? And do you think the markets are overvalued now? You know we love you, but we got to bring it up. It's on tape. Everything's kept forever now.
And you know what? I stick to that call. I absolutely stick to it. I think right now the markets have become even more overvalued. So here, let me give you some grist for what I talked about. Back then, I was pointing out that a lot of Trump's policies include tax cuts for the very wealthy. The Tax Policy Center actually did an evaluation of how those tax cuts will lay out on an individual basis, and about 56% basically goes to million-dollar plus earners, right? That is a place where the propensity to consume is very, very low. In fact, it's extremely low. The propensity to consume is naturally highest the lower you go down the income spectrum. And so as a result, the effect that you get from that tax cut is going to be significantly less than I think a lot of people tend to think in their minds. They think of tax cuts as generally being stimulative, a la Reaganomics. But we think that that's going to be a big disappointment. The second point is that if you look at what's happening with his corporate tax cuts, he's talking about cutting corporate tax rates, never mind statutory tax rates. Let's talk effective tax rates. When Reagan started cutting taxes, effective corporate tax rates were over 40%. Today they are below 20, almost 18%. There's really not a lot of low-hanging fruit to be left to be picked from that tree. And so, Brian, I stick to the point that the effects, the stimulative effects that everybody is talking about and hoping for, we have already been to this movie. We have hollowed out the middle class. We have destroyed the lower class, and we have very little to show for it. We've had two major crises to show for it. I'm not sure we're going to get another, juice of petrofuel that everybody's hoping is going to come out of Trump's policies, because they are effectively a Reaganomics redux.
Sticking by the call, we like it. You're doubling down on it, which is a good thing. It means you've got conviction on that topic. I would add this a little bit, just having been to D.C. Last week or 2 weeks ago, talking to a lot of high-level people on and off the record. Remember, there's a lot of different competing tax plans out there. It doesn't matter that it's GOP. There's a lot of different GOP plans as well, so we'll see if anything gets done. Boris, you care to comment on the markets or what Gina said?
I think long-term, Gina is correct. I think short-term, you still have tremendous amount of momentum in the marketplace. So we could see maybe another 3 to 4% up, especially if he kind of hits the ground running. But I'm not sure that that's going to be the case. It's going to be very, very difficult to see exactly how much momentum he gets out of the gate. That's going to be the absolute critical factor of whether stocks go up or not in the Q1 is how much momentum Trump administration gets the moment he hits after inauguration.
What about Okay, fair enough. What about the markets? Any view? Give us a prediction going into 2017. Lay it on the line like Gina did back in October, Boris.
I think the markets go up front of the year and then sell off into the end of the year. I think it's very, very difficult to be confident one way or the other about the markets right now because Trump himself and all of his policies are so unknown and uncertain. The bullish case here, which still makes a lot of sense, is that if he does unleash just sort of investment appetite and he unleashes all of this capital formation, it doesn't really matter how much money goes to the wealthy at this point. Just the natural momentum of economic growth should help the market go up for the rest of the year. But that requires that he execute perfectly once he becomes president.
Yeah, he and the 35 other men and women on Capitol Hill that will have still a say. Boris and Gina, thank you very much. Looking back to look forward, I'll never forget that animation. Both of you, thank you. Thank you for watching Trading Nation, everyone. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.